Hi, it's Larry Gaines from OptionsOnTheOpen.com. We are the leaders in option day trading, and it is our goal to teach you how to make impressive and consistent returns trading options every day. Well, we had another interesting week of trading, and we're a bit on the cautious side due to a market that just keeps grinding higher, making new 52-week highs with little pause to work off some of the overbought technicals of the market. Don't fight the trend, but when it does reach such lofty levels, I get very selective on my trades. This week we had some nice day trades and entered several option spreads on a few select stocks which are still trading at the lower end of their pricing cycles. In this video I thought I'd show you some of these trades in order for you to see what Options on the Open offers its members. First, I want to show you 3 intraday trades we did this past Friday, February the 11th. The first trade was on Akamai. And this stock had dropped over 16% the day before due to an earnings miss. So you can see this huge drop off here. So on the next day, this is Friday right here, the daily bar. This is when we did our intraday call spread, our call trade. Now this type of drop on a stock can offer some really great trading opportunities due to the volatility pickup from the stock having dropped so much. So most of the time you're going to get some kind of correction back up due to being way oversold on a very short-term basis. So this trade we did right on the open, about 3 minutes after the market had opened, and using our indicators we bought right here on Akamai, and we bought the March 40 calls at $3.15 per contract. About 5 minutes later, this thing shot up here like a rubber band. We were able to sell these calls back off at $3.40 for a quick 7.94% return. Now the next trade we did the same day was on Apple, and we bought right here on a momentum breakout using our indicators the March $355 calls. This came in at about 11:44, 11:45 on Friday, February the 11th. We bought here on this momentum breakout using our indicators. It gave us this entry, and then we sold off about 4 minutes later right here the 355 calls, and we sold those off at 11.35 per contract for a quick 2.25% return on our capital. We had one more trade just a little bit later on Apple, and I'll show you that now. The next trade came in on Apple at about 12.28, and this is a cycle low trade that we did intraday using our indicators. And on this trade we bought the Apple March 350 calls at $14.15 per contract. Sold them off about 5-6 minutes later right here at $14.40 per contract for a quick 1.77% return. So for the day on these 3 trades we made a cumulative return of over just at 11.96% return on our capital for these 3 trades, and I'll take that. I'm real happy about those types of trades. Well, we had another interesting week of trading, and we also did some other spreads. Now we are very active now in trading spreads, and we will trade for short-term swing moves or longer-term trends. One trade that we put on this week was on Apache Oil. This trade was based on the energy sector that I feel is in a very strong long-term bull market cycle. And Apache now is currently at its lower end of its intermediate term pricing cycle. Well, from experience, I like these particular trades. I ran an oil commodity trading group for one of the largest international trading companies in the world for over 10 years, and I know a great deal about macro fundamentals of energy and oil. And based on the supply-demand fundamentals and potential for greater geopolitical risk in the future, you better have some energy stocks in your portfolio. However, the hard part of this is finding the right stocks to buy and knowing when to buy them. At Options on the Open, our trading model helps us to select and identify stocks at the lower end of their price cycle rather than at the top. You have a much higher probability of winning if, as the old saying goes, you buy low and sell high. Well, this is what our trading model lets us do. So using our trading model, Apache was a stock that was selected. And it was identified being in the lower end of its trading cycle. And in order to take advantage of this, we bought right here on February the 7th, we put on an option spread where we bought the 115 calls and sold the 130 calls in April against it to put on a spread on Apache. So this spread we were able to put on at $6.10. So as you can see, the market on Apache, it's starting to move back higher, and we expect Apache to make a move back up to the top end of its trading cycle right here about 128 or 130. So based on this, we did this low risk spread, and stay tuned and see how we do on this spread and many others. And if you'd like to learn how to day trade or swing trade pricing cycles, come join us at optionsontheopen.com. That's optionsontheopen.com, and thank you for your time.